Good afternoon, everybody. We're waiting on Nike here. But let's do the disclosure because it's 10 after. Actually, just give me 1 second. Let's do it. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable in light of your own financial condition. Position disclosure updates. I'm out of, well, yesterday in the disclosure I had U Pro and TQQQ, but I sold those positions late in the evening trading session into a little uptick, which did mean that I missed the gap up on those positions this morning, but it's fine. And now I'm keeping AMD and NVIDIA overnight, which I'm happy to talk about what I'm doing there and talk about this market a little bit like I always am. So at the end of the day here, and today is December 21st, the S&P closed up 1%, the Qs closed up 1.1%, and the IWM closed up a pretty nice 1.7%. So those are pretty big percentage up moves today, but it's actually just an inside day. The market's range is within the range of yesterday's trading session. Yesterday we had a really big, wide ranging sell day, so I guess seeing an inside day today is not surprising. It's not what I was looking for. I actually thought that we were going to rally more today, and I was looking for that rally to happen earlier in the day, which we know those early morning rallies are a lot trickier these days than they used to be. A lot of the times we're dealing with weaker morning sessions than afternoon roundups. Today was really just a range-bound inside day with a final little roundup in the last 50 minutes or so. That's after the market had this nasty little like quick shake and bake at lows where they probably shook out a bunch of day traders and then turned it back up. I know I actually got shaken out of my NVIDIA position into this move, which I rebought. But yeah, at the end of the day, there's not really too much to talk about with the market. My thought process coming into today, so we discussed, and I'll turn the camera on for anyone who's on YouTube. We discussed in the morning meeting today that yesterday's candle is a negative Maribozu. It's a bearish candle within the confines of a bullish uptrend for the market. And what that candle usually means, I call it like a penalty box candle. It usually means that the market needs a little bit of healing. Not that the market is going necessarily from bullish to bearish, though a similar type candle did mark our high in July, which is what we were looking for at that time. Though I think that back in July, positioning and sentiment were actually significantly more frothy than they are now, which led us to believe that the push-through failure back in July would lead to a bigger sell-off, which is what happened. My thought process with this candle from yesterday is not that same thought process from July. So technically that candle is like, hey, let's take a half step back. We're in the penalty box. The market's still in its bull trend, but let's see what type of price correction we're actually getting. A lot of the times that's going to lead to a deeper pullback into equilibrium, and then maybe you get your pivot. Bulls need this candle to get negated. Usually a negation of this type of candle happens in one of two ways. Either it's what I just went over, where you get the continuation of the downside for another day or two, then you get a tail somewhere maybe a little bit closer to this 21 EMA, or maybe even piercing through this 21 EMA, and then you snap back up, and over time you work your way up to new highs, and that becomes a bigger picture, higher low in an uptrend, and helps just satisfy some of the bigger picture overbought conditions that this market was starting to deal with at highs. Another way in which this type of candle will sometimes get negated is through an inside and up. An inside day or an inside candle that then breaks to the upside. And right now we're actually setting up for that. We have the inside day. We closed really strong and closed at highs. So we could be setting up for an inside and up tomorrow into next week get this market potentially back to highs. The rarest thing that can happen after a candle like yesterday, though the rare does not mean never. Ooh, Nike's out. Gotta remember to hold my thought. Nike trading up. Thanks, Bill. China misses. Q4 rev overall misses by a little bit. Gross margin is a slight beat. I always like that gross margin number when it's a beat. Inventory came in light. I'm not sure how to interpret inventory, to be honest. I would assume it's actually a good thing. EPS is a solid beat. They're looking to deliver $2 billion in cumulative cost savings over the next 3 years. It seems to be the theme with a lot of companies right now. Areas of potential saving include simplifying product assortment, increasing automation, and use of technology. Yeah, automation. Nike down now to flat-ish, which I'm not surprised to see. These numbers don't look fantastic to me. They look very mediocre. All right, I'm going to go back to the meeting. Told myself I needed to remember what my thought was, and naturally I don't remember where I was. We're talking about the inside. I remember. So we're talking about ways in which the negative Maribozu tends to get negated. We talked about the pivot situation. We talked about the inside and up situation, which is the situation that might be playing out. The lowest probability way in which a negative Maribozu like this gets negated is with a positive Maribozu the very next day that gets you right back above that high. That's like the rarest situation. That's actually kind of what I was looking for today, knowing that it's the rarest situation. And I kind of explained my thought process for it. Obviously, my thought process did not work out. We got just an inside day today. It's really just kind of a bullish rest candle because we closed on highs. But I thought that given that yesterday's sell-off was entirely structural in nature, coming from a 0 DTE SPX put, basically, that led to a bunch of dealer hedging that created a pretty heavy sell-off in the last hour and a half of the day, and that there was no real news behind it or anything like that. That trade is over and done with. That person made his or her money already and has moved on. I thought that there was a chance that we just immediately snap right back to yesterday's range. And certain stocks obviously did that. The market itself did not. So my thought process that the lowest probability situation might actually play out today was not accurate. That isn't to say that today's candle isn't bullish, and that isn't to say that we can't actually still make our way to new highs by the end of the year. I know we only have 5 trading sessions left, but now what we're left with is this inside day into equilibrium after this negative Maribozu, going into our official Santa Claus rally time, right? The official Santa Claus rally period, if it were to happen again, which, it's just a tendency of the market to go up in the last 5 trading days of the year / the first 2 trading days of January. And I don't know the statistics off the top of my head, but there is an outperformance period there historically. So, and I think actually also that outperformance tends to be even more of an outperformance in years that were already where the market was already up by a decent percentage into that last week of the year, which obviously defines this year. I don't know what percentage we're up on the year as of today, but it's been a significant up year for the S&P and the Nasdaq especially. So we'll see if we get that followed through. It's at the same time as I've been looking for and obviously reading some smart people who are looking to see if we get some sort of kind of crash up into the end of the year here / the beginning of January, possibly even like a VIX up, market up situation, maybe coming in for the last leg of that. We're yet to see if that happens. but that's kind of what my thought process is. I was thinking that the gap up this morning, if anything, just would make it easier for this market to move higher, which normally is not the case. But I think because we closed on lows yesterday and into the close, no one knew what was going on. Everyone was dumping. No one really wanted to have shorter term new long exposure from the last few days as of yesterday's close. That if we gapped up and continued right away, that would actually be the max pain trade, because you're not giving the short-term longs that stopped themselves out yesterday an opportunity to get back in, and anyone who was like, yes, finally the sell-off is here that I've been looking for, let me get short, is immediately getting squeezed once again. So I am still looking for the rally. With that said, I still stand by what I was saying earlier in this week, that this could be a rally. It's like a rally that you need to be careful of, because I don't necessarily believe in its longer term potential. I think it's just like the final, squeeze, get all the shorts to finally throw in the towel, get everybody back to being bullish and more bullish sentiment again, and then maybe make the rug pull after that. So I've been trying from a bigger picture positioning perspective to take a less is more approach right now. My portfolio of longs has gotten pretty light, yet I haven't been putting on any new shorts because I want to be patient there and wait for that. But then, given kind of yesterday's down move and my overall thought process, I decided to go after a few trades today, honestly, in a way that I don't really trade anymore, or at least not very often. And I think I also kind of described that in the morning meeting. This really isn't how I generally trade anymore, to be totally honest. I like to build into things, I like to give things breathing room. What I was trying to do more of today was take really big position sizes with tighter stop losses, and then just be super greedy on the upside. Because I think I'm either going to be right or wrong, of course, with my thought process here into the end of the year. And if I'm wrong, on a real squeeze higher into the end of the year / the beginning of January, I don't want to be bag holding new long positions from these prices for kind of reasons that I already explained. But if there is a real significant up move that leads to a parabolic move for the market, I also obviously want to be able to take advantage of that. So in some ways, I feel like I'm taking some calculated shots into the end of the year. It would be the way that I would describe it, and that's just kind of being totally honest. And the thought process on what to focus on came from a couple of things for me. One was the Micron earnings, which I thought were really solid, and the other is really kind of just this NVIDIA chart in general. So even though I haven't done a ton of trading of semiconductor names in a while, all of a sudden that was my 100% focus almost today. I was going after NVIDIA, I was going after Micron, I was going after AMD, I was going after Marvell, and I want to see what they could do. I thought that the micro earnings report was solid. I was aggressive with it, pre-market, starting early. Caught this up move, bought back some stock down into this tail. When the ADMA caught up and this attempted to pivot higher, I raised my stop on everything to this tail low. Originally, I was using 82.75 as my stop for most of my position. Unfortunately, I got pushed out of everything that I had at the low. And because I was being so greedy on it, it only turned out to basically be a break-even trade for me. So at the end of the day, even though I was up a lot in Micron at a certain point on highs, I'm still trying to ask myself if it was the right thing to raise my stop, given what my thought process is. Should I have raised my stop? Should I have just left my stop for everything at 82.75? And if I got stopped out at 82.75, it actually would have been a losing trade for me, though not by that much. Not by that much. But again, I'm just trying to be really greedy and just have that stop loss in and either let it just go down. I'm not really trying to trail positions, I guess is what I'm trying to come across, is what I'm trying to say. Whether it's NVIDIA or AMD or Marvell, which I could talk about that also. That was a little bit frustrating for me. I'm not really trying to trail so much right now. I'm trying to just like, you know, step up to the battle line with my spear drawn, with my shield, and you shall not pass, and that's my stop loss. And if the battle wins, then get some really nice P&L on the upside of it. And had I actually kept the line in the sand where it was, I never would have gotten pushed out, and I would have still had that stock into the close, and Micron actually closed really well. But I did raise that stop, I did get stopped out, and it kind of turned into a break-even trade. So that was, I don't know, slightly frustrating, but I'm trying not to look at it too much, and I'm trying to just move on. The one that was much more frustrating to me, just because I couldn't get stock when I wanted it, was this Marvell. I don't have a lot of experience trading this name, to be totally honest. I really liked it yesterday. I took a loss in it yesterday, but I liked it. I really liked the $60 breakout. I liked the option flow that was coming into it yesterday. But obviously the trade failed. The market failed yesterday. Closed on lows. They probably shook everybody out. And then this morning they were gapping this thing up. I was trying to buy using a refreshing order pre-market to not show my size. And I couldn't get stock, and I lifted my bid several times pre-market trying to get stock, and I just couldn't get filled. I think at first I was the inside bid in like the 30s, and then I stepped it up to like 41 cents. I got partialed like 7 shares or something there on this dot. And then I brought it up a little bit further to 51 cents. And I said, that's as high as I'm going to go, because I was going to give it all the way to yesterday's low. I was like, all right, at 51 cents, if I get filled here, I'm going to be taking a full $1 worth of risk on some size. I don't really want to pay up any more than that. And I got filled like another 190 shares at 58.51. It's not anywhere near the size that I wanted on it. And I sold my 100 shares, and I sold my 97 shares from those 2 fills, and even sold below the low of the day in those positions, kind of all pre-market, because I never actually got any stock. And in some ways, this was like the best one. Micron broke lows, Nvidia broke lows. I guess AMD never technically broke lows. I didn't have that immediately as much of a focus for me. If I could have gotten that fill on that position, this would have been a phenomenal trade for me, and it looks great. It closed above $60. The trade still might be there tomorrow. It is technically an inside day also, but it closed above the breakout level. It closed above $60, and it held in really well. I remember at one point when the market did that like shake and bake here at 115, that this thing did not even downtick. Where's 115? Yeah, look at that. No downtick at all, but then it still got the uptick. I was like, oh. And again, this is like a great example of just underlying buying, smaller time frame relative strength that a trader can pay attention to. You see that whole market do that quick downtick uptick thing that it did, but this stock doesn't even do the downtick but gives you the uptick. That's notable. There's some underlying demand there. And I thought about buying back in. It's just, it's hard psychologically. When I was trying to get this stock, I was like, I could buy here, I could just use this support, I could give it to the day low. But, I felt that the right stop was really yesterday's low. I had a specific game plan that I created for myself pre-market. Now I'd be adjusting the game plan on the fly. That's when I'm still in AMD and a large Nvidia position. So I never actually got in this, but it closed really well, closed above $60. So that was that. It was generally just a tricky session for me in some ways. Even at the end of the day, I'm up a decent chunk in AMD and Nvidia, and I'm swinging them. I'm swinging them in such a way where I'll give it back everything I made in AMD, but I shouldn't be able to lose money in it. And Nvidia, I'll give back everything I made plus a bunch more, and I'll finish negative in it if the idea fails. AMD, you actually can't see my red dot here, which is weird. But I was just typing up whenever I'm trading one stock that's in a sector. I type up all the other stocks in that sector religiously to kind of just see what they're doing, see what the sector is doing. So I'm typing up SMH, Intel, AMD, just kind of all those names, just kind of cycling through them. And whereas Nvidia was like a real struggle at certain points, This AMD was actually holding in much better, and the ADMA caught up, and it was tightening here, and it was building this pattern with some intraday resistance at 138. And I was like, oh, if this thing actually clears 138 as the ADMA is catching up, especially if this market could be supportive. It's still 10 a.m. There's still an opportunity for this market to be supportive, where we were at the same time waiting for the ADMA and the Qs to catch up to see if the Qs could catch that bid and give a little bit more of a rally there. I was like, okay, here's an inside 5. As the ADMA caught up and the Qs are looking there, I just put in a buy stop right above the high of the inside 5. So you can see my buy stop trigger. And I was like, I'm keeping this as a pure momentum trade. So I just put my stop in at the low of the inside 5, not the low of the day. And what you can't see for some reason is I got fully stopped out of the position on the break of that bar. And it just didn't look right to me to get stopped out there. I'm having a little bit of trouble putting my finger on why, but I was like, I really should be using the low of the day as my stop loss. Honestly, what I'm saying right now sounds like churning, so be very careful. I actually, as I'm describing what I did here, I would tell you that I hate trading like this, and I've gone over this in the past. I really struggle with using tighter stops, which is a lot of what I'm doing today, because if I get stopped out of a position and I don't know that my idea was right, I have a tendency to churn myself. And maybe that's what almost could have happened here in this AMD. I get stopped out of my trade at the low of the inside 5, and I say to myself, oh, but this is just a correction into 5-minute equilibrium. Why am I not using the low of the day? Let me buy back in. And I bought back in, actually with even more shares than I had gotten stopped out of, and now I'm using the low. That's very dangerous. You got to be really careful with that. As I'm going over my trading here with you guys a little bit, I don't like this. It worked today, but there is a good chance that I was just totally churning myself. And then it went, and I sold some to cover my risk, and I didn't sell anything else until I took a little bit more off into the close, just into this 140, just to lock a little bit away. But AMD looks great also. AMD looks great. AMD, so another way that for anyone who's looking to find relatively strong stocks, find anything that traded above or closed above yesterday's high today. Well, AMD did it. This thing is super strong. And as I was getting into AMD and seeing AMD work with NVIDIA not really working as well, I reminded myself of that pairs trade we were looking at earlier in December on that kind of AMD news, where they basically said, hey, we're here to compete with NVIDIA. We think that our stuff is better than NVIDIA. And I remember at that time, I was talking about like a hypothetical short NVIDIA long AMD pairs trade. And that hypothetical trade's actually worked out really, really well. So I've got some AMD, keeping it tonight. And then the final one is this NVIDIA, which in so many ways was the worst one of the semi names. It's really relatively weak. My thought process on this NVIDIA, and I want to repeat what I said in the morning meeting. I'm not married to these stocks at all. I am looking to keep relatively tight stop losses on them. I know what my risk is. I really like my risk reward, just in case my idea is right and it works out. If my idea is wrong and it doesn't work out, then it's going to be right back to business as usual, and I'll get stopped out of these positions and I'll lose my risk and I'll move on. But what I'm thinking with NVIDIA is that it's just been such a leader all year that if you do get this like real final push into the end of this year or at the beginning of next year, this NVIDIA breakout with an ascending wedge in front of 500 is like really becoming a level. It's been a level. But what do we know about technical analysis, right? We know that every single time a resistance level gets tested, there's a higher probability that a breakout will occur. Well, now it's been tested 1, 2, 3, 4, 5 times. If it gets up there, it's going to be a 6th time. It's doing that with a bigger picture, higher low in front of the level. Sometimes, so an ascending wedge, sometimes that helps to set up the breakout. So, my thought process here is I don't see how NVIDIA doesn't participate in a real final leg of this market. And if anything, if NVIDIA can really clear up on this ascending triangle and really clear through that $500 resistance, not only do I see it not participating in the maybe final leg up, if we want to put an asterisk next to that, of what's been a really big market move, I, I would assume that it would actually lead it. So the thought process I was trying to have all day is trying to establish a position in this thing, obviously with risk management in place, but then if I can just get it right and get some spacing and be in the money on it, I'm trying to figure out just how greedy I would want to be on that, because I have a really big position, and normally the way that I trade, and most of you guys have been on the team for a long time, the way that I trade, a lot of what I do is building into positions, building out of positions, piecing out on the way up, covering my risk, rebuying stock on the way down. I think I don't want to do any of that with this NVIDIA. Or even to some degree, AMD, now that my risk is covered. With Micron, I was going to do that with a game plan all the way up to $90. With Marvell, I was going to do kind of a combo approach. That was the game plan there. So it's like, I guess you could look at it with different levels of, greed per game plan. And the NVIDIA one is the one that I'm trying to have the most amount of greed for if the idea actually works. And I'm like, well, where do I want to actually sell stock? Like I'm trading it back and forth a little bit as I'm trying to establish the entry on the position. So there were a few times where I took some ads and I would sell some of that ad real quick. But it's like once it can really clear above like 490 to 500, really once it can clear above 490, I don't want to sell any stock until I think this is the game plan that I want to use. Though I'm struggling with it because it's just really not how I trade. I really just think I kind of want to be like all or none with this. It's a big position that I'm keeping tight. My position in NVIDIA, from like a dollar value perspective right now, is equal to every other position that I'm in combined. That's like where I'm at with it. But again, I want to also emphasize, like, I'm taking a shot. I'm taking a shot. And if it works out, great. And if it doesn't work out, my risk on it really is not that bad for the size that I have. But if it works out, where will I sell stock for the first time? I'll watch the technicals on it. But I'm thinking like maybe sell a little bit of my position at like 525. If you break out of this level here and this market hole really starts squeezing, I don't think it's impossible to see a really fast move to like 575. To be totally honest, and we've seen how NVIDIA has moved in the past when it starts going crazy on some of those 3-day moves. I mean, there's plenty of recent examples even within here. It's possible that if this thing really clears through and you're seeing the volume confirmation, you're seeing like option flow come in, and it's also like the end of the year here or early next year, and the market's like trading more liquid, that you get a 3-day move that gets you to $575, and I want to be selling 90% of my position at that spot, basically. And obviously, I want to assess what the move looks like if it happens. I want to assess what the technicals look like if it happens on the way up, and I'll adjust my thought process kind of based on the move. But that's kind of what I'm thinking with this, or just stop me out. Like I'll tell you what I don't want to do on this position. I don't want to make $2,000 on this position. I would much rather just lose my risk than make like a couple $1,000s on this position. So that's where it's at. And if anything, if it trades right tomorrow and the market's giving the inside day and up, I'm going to look to buy more of this NVIDIA on its inside and up, or more of this NVIDIA through clearing of $500 if the volume looks right and if I'm getting confirming signals that I'm looking for, and add on even additional risk and see if the shot that I'm taking actually works. And that's kind of where my head's at. So like overall, in some ways it was like kind of a boring-ish day. It felt like a Friday, but at the same time, just with how I'm trying to put these positions on today, it didn't really feel that boring to me. Was just kind of watching them really closely. And this was another one. I got shaken out of this NVIDIA. So I it was a little bit frustrating. Micron got shaken out at lows. AMD I basically got shaken out at that low, but I rebought, risking churning myself. But I almost got stopped out at lows at AMD. Marvell I didn't get any stock, and Nvidia I got pushed out when the market did that shake and bake of my entire position. Originally I was going to give some down to like 481, but as I increased my size, I was like, I'm going to give everything basically to whatever the low was at that time, like 485. 485 was also the spot that I was looking at based on the pre-market price action. I got pushed out of the entire position when the SPYs did this, quick little shake and bake right here. And then this was another one that, at the risk of churning myself, I re-entered back through the level. And there's another spot where, I just showed how you could see how Marvell was relatively strong. It didn't even downtick at 115, but the 120 candle was already upticking. If you look at the SPYs or the Qs, they had a solid downtick at 115, but they fully negated it at 120. You can see the relative weakness in Nvidia because it'll also downtick with the market, but unlike the SPYs or the Qs, which fully negated the downtick candle by the next candle plus some, this Nvidia couldn't do that. So, I also risk kind of churning myself here by rebuying my stock plus rebuying even more of that stock versus that low when it was acting relatively weak compared to the market. And luckily, I like I said, I was trading it a little bit back and forth as I was trying to establish the position. On the added stock that I bought, I was able to kind of get the risk covered on that, plus, even sell a little bit more of it, and actually it added slightly to my overall core position as this thing started to go. Actually, no, I take that back. I sold everything of the added buy into this end of the day, and I'm back to just kind of the bigger core. That's what I'm thinking. Overall, it was slightly frustrating because every one of those names I just mentioned, Micron closed out on highs. Marvell looks fantastic, closed out on highs. They frustrated me. AMD, I was able to kind of recapture it, and I'm up some okay P&L as of the close. But that one shook me out. I had to find a spot to be able to re-enter. Nvidia shook me out at lows when the market ticked lows. That one I had to re-enter. Like I really don't like re-entries like that. Most of the time, what I've taught myself to do at this point in my career when I get pushed out is that I would rather, and this is like what I did with Tesla the other day, and I think it was the right thing. I would rather just get pushed out of the position and not re-enter and have it work without me than risk churning myself. I think that's what my statistics show. But this is also just a little bit more unique of a trade compared to what I normally do. So at risk of churning myself in those names, I was able to get back in, and then they closed okay because the market did its normal thing by upticking into the close. So that's all I got. That's kind of where I'm at. Hope you guys found it interesting. I'm happy to answer any questions that anybody has. From Dave, very generally speaking, should we expect the back half of January into March to be a pullback of that scenario if it occurs, instead of just consolidating around SPX 5000 if that happens? So that's what I'm thinking. Parabolic moves, if that's what happens, usually lead to legitimate sell-offs off that. I think off whatever that high is in the market, if that situation plays out, a 5 to 12% correction off those highs will actually make plenty of sense. And if everybody's been reading Pat's note every day on how defensive these bearish sell-side analysts are and how they're, it's been really interesting notes that we've been reading every morning about how, like, the rally has been so big that a lot of these sell-side analysts are seeing the S&P already trading at their 2024 year-end targets. So they're like already raising their targets for 2024 that they just posted like a couple weeks ago, basically, which is really wild. But you'll see, I think, that happen entirely, and it'll be in conjunction with what Bill just said. It'll be, spot up, VIX up, as you're seeing the whole sell side chase the rally, and then it'll hit a point that'll be similar but different, I think, to what we saw in July. Probably similar in terms of like sentiment and positioning at a certain point, but different in terms of the technicals on what we saw in July, and and that's how that would play out. You know, we'll see the, you know, probably spot up VIX up into the last leg of that, similar to that 6-day rally where we were starting to go parabolic back in August, September 2020 that I've highlighted in the charts for you guys in the past recently as well. And, you know, we'll squeeze up into all new all-time highs. No one's going to have any shorts left on their books. And then, you know, similar to the example from 2020 that we've shown, those moves really can't be sustained for significant periods of time. I don't think. And then I think that's when you get your, you know, I'm going to call it, and we're going way too out now in time, because I always do like to take things kind of day by day and week by week. But then at that point, you know, to more directly answer your question, Dave, then off what those highs are, depending on where those highs are and extension and everything else, then we see, you know, a 5 to 12% pullback, and that'll be a time where at those highs, my hope is that I'm like stupid light to the long side, and possibly, you know, really looking for that signal to take a trade then on the opposite side and really come in short, and then that could actually be a great setup also. But you know, again, we're getting way too ahead of ourselves, I think, at this point, if we're talking about the short trade off of the parabolic rally that hasn't even yet begun to fully manifest itself yet. So let's just take it kind of one day at a time. But, you know, for the moment, I'm trying to position myself for that move. So, thanks, Dave. Rich is asking me when Genko is going to release their earnings. You know, Genko jeans are back. I've been getting targeted advertisements because I talk about Genko jeans once in a while to you guys. I've been getting like targeted advertisements on like social media for Genko jeans. I'm like tempted to buy a pair. Just I don't think I could wear it in public, but just to own one. Oh man, it's so funny. Definitely check them out. With the vest, I have a new vest from T3. I'm not really a vest wearer. I don't think I've ever owned a vest before. But that would be hysterical, wouldn't it, Josh? If I got a pair of Genko jeans and I come back to the office in June and I just show up with long hair and my facial hair again from COVID, and just walk in the office and say hi to T3 CEO in Genko jeans with my vest on. Oh man, I'm ready for the end of the year to happen. We need some holidays and some days off. All right, what are we talking about? From Nick saying sometimes you have to swing the bat when the setup is there. Yep. From Dave, for what it's worth, if you don't want to trim an end back in NVIDIA like you usually do, then that is where actually selling a call against it might be ideal once it starts working. I just want to be careful in limiting my upside. Which the whole reason why I'm not, you know, trimming and adding back and looking to have that strategy is because I don't want that strategy to limit my upside of my ideas right on this. And I would imagine that at a certain point, unless depending on what the strike was, selling a call against it could limit that as well. I don't know what you're talking about, Rich. What is IPO? IPO. Oh, IPO. Gotcha. The Genko IPO. Maybe they finally will. Maybe they will IPO after they were public 20-something years ago. Cool. Looks like I got through everything in the VTF. Let's hop over to YouTube. See if anything's happening in there. Michael B. Do you have any holiday specials going on for access to your VTF for outside retail traders like myself? Shoot me an email, Michael. I'll see what we can do. Not that I'm aware of, but shoot me an email, Oldensmith@t3trading.com. First initial, last name at t3trading.com. Tate saying don't forget to like and subscribe in YouTube. I love it. Gabriel, would you say tomorrow is a day to start a couple positions? I don't mean go max risk. Yeah, if you want to, I think that the key for right now is that you can take long positions if you're taking them as trades and you're keeping them tight on the downside. So yeah, tomorrow if we get an inside day and up on the market, so you're getting market confirmation, then sure, I think that you could take some of those trades. And if the entry doesn't present itself, then don't take them. And if you do take them and you do get triggered in, I think it's always an important time to manage risk, but I think it's a particularly important time to really make sure that you have those stop losses in place. Cool. Thanks, Gabriel. On that note, I'm gonna wrap things up. This may be my last afternoon meeting of the year. I think Josh actually might give us an afternoon meeting at one point next week to close us out for afternoon meetings on the year. That'll be interesting. But outside of that, I think I'll probably cancel afternoon meetings for the rest of next week. We'll pick them up into January. So maybe everyone gets lucky with a special VIP appearance from Josh Leffler. But for me, this is my last afternoon meeting of the year. It's been a phenomenal trading year with all you guys here on the team. Love having everybody who's here on the team. People who are following along on YouTube, I appreciate you guys as well and the thumbs up. Let's set ourselves up for a phenomenal 2024. I'll still be seeing everybody in the VTF every day, obviously, even if we're not doing an afternoon meeting. But if anyone is out there in YouTube or anywhere else that I won't be seeing, have a happy holidays, a Merry Christmas, a Happy New Year, and all that great stuff. Have a great night.